Joining me today at the NYSE's ETF Summit is Brian Giere. He is the head of national accounts at Amplify ETFs. Brian, wonderful to have you here. Thanks for joining me today.
Thank you very much. Happy to be here.
Great. So now tell me, do you have a favorite NYSE ETF in your lineup?
I do, yeah. We've actually seen a lot of interest in our income-oriented strategies and high quality and equity strategies that produce income. And there's one in particular that we like, and it's the year of DIVO, D-I-V-O. It's the Amplify CWP Enhanced Dividend Income ETF. So kind of a mouthful, but it's a great portfolio. It's actively managed by our sub-advisor partner, Capital Wealth Planning. It's really a core equity income product. So it's comprised of about 25 blue chip dividend paying stocks with a history of growing their dividends and earnings. So it's names that people are well familiar with. But the interesting thing about this portfolio, other than those well-known names, is that it implements a covered call strategy on individual stocks. So it's not an index cover call approach, it's on individual equities. And those cover calls help to provide more income in addition to dividends, and also mitigate some of the volatility, which has helped this year. So the combination of the dividends and the cover calls, we seek to provide about 4 to 7% distribution rate. It's paying just shy of 5% right now. Inflows, it's in the top 5% year to date of all ETFs as far as inflows, and it's 5-star rated by Morningstar, so some good third-party validation as well. So it's simple and has a great process. So,
all right.
Yeah.
Okay, so now tell me, what are you hearing from advisors right now?
Yeah, so we have a team that talks to advisors every day, and most of this year there's been a definite cautious tone. We see it with the increase in money market and cash assets. So I think with what's happened in fixed income this year, a lot of advisors have revisited the traditional balanced approach of equities and fixed income. So they're saying, what do we do? So right now they've kind of taken a cautious approach, but with that backdrop, a positive that we've seen is that ETFs as a product line are gaining traction and outpacing mutual funds in a lot of these firms. We're getting that real data from the firms. Some firms for the first time in their history where ETFs are outpacing mutual funds. So with the backdrop of kind of that caution, we're seeing that from a product line standpoint. But now I think, just to end, most recently we're seeing advisors, willingness to still take the opportunistic bets or investments even into fixed income because it's gotten beaten up, to see those opportunities and then look at other equity opportunities as well. So I think most recently in the past month or two, the tide is kind of turning a little bit from that caution.
Okay. All right. Yeah. Well, Brian, wonderful to have you here. Thanks for joining me today.
Great. Thank you. Appreciate it.